I got a big question for you, everyone out there. Do you have some extra time on your hands, or are you feeling kind of lonely? Maybe you want to invite some IRS agents into your life. Today, I've got tax attorney Hubert Johnson. We're going to be talking about 5 easy ways to get in trouble with the IRS in 2025. And we're going to kick things off in just a moment.
I'm David C. Barnett, and you're tuned in to Small Business and Deal Making, the podcast, YouTube channel, and blog where I talk about buying, selling, financing, and managing small and medium-sized businesses while controlling risk. So if you're looking to take control of your future through buying a business one day, or if you already own a business and you're looking to grow or exit, you've come to the right place. I talk about interesting things, I talk to interesting people, and I answer your questions every week right here. So be sure to hit like and be sure to hit subscribe, and let's get to it. Are you a small business owner that's thinking about exiting your business now or in the next few years? My team and I are here to help with our unique zero commission program that we've been using since 2016. We can show you what your business is worth, prepare the package you'll need before you meet your first buyer, even run a confidential online advertising program for you just like business brokers do. And we'll coach you through the whole process, or you can hire us to manage it all for you, including coordinating your whole sell-side deal team. Head over to howtosellmyownbusiness.com to learn about how my team and I can help you get ready by watching a series of videos we prepared that explain each step in detail. And if you're ready or just curious to learn more, reach out to us and we'll get you started or schedule a call to answer your questions. I look forward to meeting you and learning more about your business.
Welcome, everyone. Today, I've got tax attorney Hubert Johnson. Hi, Hubert. How you doing? Welcome.
Doing great.
I think that we need to kick things off just by finding out exactly what a tax attorney is. I mean, most people know what an attorney is, someone who works with contracts and legal issues and things of that nature. Can you give us a little bit of insight into what in particular makes an attorney a tax attorney?
Well, I specialize in dealing with tax controversy. So mainly it is tackling tax issues with the IRS and state agencies, going as far as the federal district court level with the DOJ, and representing people at all levels with all kinds of tax problems.
Okay. And so, when people often think of tax problems, I think of people making mistakes or misfiling things of that nature. But would it also would your work veer as well into more sort of criminal elements too?
So there are times it goes there, and I none of my clients that listen to me go there. I have had one client that was going there, and I had to fire them. And I explained to them exactly why. I gave them plenty of opportunity to secure, and they asked me, "Well, how many clients have you had go there?" I'm like, "You're the first. You're not listening. You're going to have an arrest warrant issued for you, and I'm not going to be part of that. I'm not going to watch you implode your life."
Wow. Okay. So this is, if they did not take steps to rectify what had been done, then they would ultimately have been deemed to be doing something criminal, is what you're saying.
It can go there, yeah.
Yeah. Okay. Okay. And so I'm guessing you went to law school. What other things did you have to do in order to sort of build the tax qualification?
Well, going to law school, but getting licensed with the IRS, and it's easier than you would think. There's a lot of CPAs, enrolled agents that also dabble in what I do, but this is my specialty, so it's all that I do, and that's what really makes me.
Awesome. So we've got a list of 5 easy ways for people to get into in trouble with the IRS this year. We're going to go through them. We're going to have a little bit of a conversation about each one. And you helped me come up with this list. And this list has basically been derived from some of the most common problems that you see people getting into, right?
Yeah, this is, if you want to hire a tax attorney, you have to pay a lot of money to deal with some really nasty issues. This is how to do it.
Awesome. All right. So the first one is ignoring estimated tax payments. So what are estimated tax payments? Can you give an idea, maybe for someone who hasn't yet become a business owner, about some of the regular sort of stuff that they have to do in submitting payments to the government?
And so I actually just had a client in my office where we were talking about this. It's fairly simple. If you don't have someone pulling taxes out of a paycheck, a W-2, or sometimes a 1099, if you don't have someone pulling money out and paying it to the IRS for you, you get to do that on your own. And so it's just one of those things you have to get in the habit of sending regular payments into the IRS. Right now in 2025, and the client I was just talking to was like, okay, what have you already paid in for the current year? Do you already have money set aside and submitted to the IRS? And the IRS wants you to pay at least quarterly. If you're not doing that, there's an extra 8% penalty you get to pay just for not paying your taxes. You can pay everything by April 15th and still get smacked by this new penalty that's going to surprise a lot of people because 2024 is the first year it's in effect.
So just so that we're clear here, the tax filing year is the calendar year, right? So if I operate my business in 2025, let's say I started a business on January 1st and I've started to make some profit, most people might think, well, at the end of the year, I'm going to file a tax return, then I'll find out how much I owe. But what you're saying is what you actually have to do is some work throughout the year to make some prepayments that will then be reconciled when you do your tax return.
Exactly. And it helps you know what's going on with your business by doing regular profit and losses at least quarterly. And it helps make sure that you're going to avoid penalties and interest, but also it puts you in the driver's seat for managing your business and your business finances.
So how do I know how much to send in? Is it based on what's actually happening in my business, or is there a way for people who've been in business for a while to kind of rely upon their prior year's, outcomes,
As long as you're
results?
doing 90% of the previous year's return or tax bill. So if you owed 100,000 the previous year and you pay 90,000 in the current year, that's kind of a safe harbor. Above a certain threshold, I believe it's 250, 300,000, something like that, then it goes up to 110%. Or you can be doing those quarterly statements, seeing exactly what's going on with your business, and you're submitting the payments based on what's actually happening in your business. I
So
highly
the
recommend the latter.
Yeah, yeah, exactly. Like actually having visibility into what's going on in your business is obviously the best way to go.
I can't tell you how many people file extensions. They don't get their 24 returns done until October, and most of 25 is already done, and they haven't paid anything in. They don't know what's going on. It's just guesswork, and I don't know how you run a business like that.
I believe you because I meet some of these people, and there's this sort of comical stereotypes people will often think about of that business owner running to their accountant's office with the shoebox full of receipts, to get in
Yeah.
on time or whatever. And the reality is that there are people that are kind of still living in that reality, even with computer software and sort of the relative ease that technology is bringing to this job. There are still people who are ignoring it or you know not getting somebody to do it for them.
And I think the key is not that they're bad business people. They just haven't surrounded themselves with the experts to really help them avoid all these problems and issues. They could be a great plumber, a great moving guy. I mean, you could have so many businesses and you could be great at what you do, but not be great at handling the tax side of things.
So just to be clear, if you decided not to do your estimated filings, you would essentially be adding 8% to your tax burden.
Yeah, it went up from 3% up to 8% for 2024. So it's going to surprise a lot of people. And it's basically, even if you're employed, if you're a W-2 employee and you haven't had sufficient withholdings, you're also going to get smacked with that extra penalty for 2024.
Do you think there were some people out there consciously deciding not to make those payments because they felt the penalty was relatively small at 3%?
Oh, absolutely. A lot of CPAs advised it because the market was doing better. You can invest the money and do better in the market, but that's not so much the case anymore.
Mhm. Awesome. And so obviously, if you don't pay, when it's due in April, then you also then face the burden of interest upon these penalties and the amount outstanding as well.
Interest, and then you have at least half a percentage penalty per day, up to 25%, as long as you don't pay by April 25th or April 15th. And then the failure to file penalty is even nastier at 4.5% a month up to 24.5% of the total debt. So between the two, it's 49.5%. And people wonder why their tax debt explodes when it sits there and they don't handle it.
What's the most delinquent sort of scenario that you've had to deal with a client?
20 years.
20 years of unfiled taxes.
Well, I've seen further back than that, but when people file, tax debt typically falls off after 10 years. But there's been times I've seen it extended out to 20 years and beyond with bankruptcy, federal courts. When you talk about having criminal penalties, then it can go out to 40 years, which is mind-boggling. But yeah, the best thing is to deal with it head on, deal with it easily, and upfront, and it's a lot easier to handle it that way.
Yeah. All right. Well, thank you. Number 2 on our list is the mishandling of payroll or sales taxes. Can you talk to us about how they're supposed to be handled? There's a concept here, like a trust concept that's in play here, isn't there?
So for payroll companies, it's called a trust fund recovery penalty. And so as a business owner, pay all of your taxes if you can. If you want to be my client, then the worst taxes to not pay is sales tax, because this is money you actually collect from your customers and you're supposed to remit to the state. If you don't, the states will go after the owner personally for anything. It doesn't matter if the company implodes, catches on fire, burns to the ground. They will come after you personally for sales taxes that you didn't pay to the state, and go after all your personal assets. When it comes to payroll liability, the IRS will come after you personally for half of it. If it's just business debt, you can walk away from a lot of it. But the way to handle it is just make sure you're on top of that. A lot of states, most states, it's monthly returns that you have to file, you have to stay on top of. And people think, oh, it's a state, I don't need to worry about them as much as the IRS. Absolutely wrong. The states are more aggressive. They'll come after you and give you fewer breaks than the IRS will. So again, pay that sales tax, pay the payroll tax if you can. If life happens, get help early.
Yeah. So I talk to people sometimes about cash flow issues, and one of the things that particularly new business owners sometimes have trouble getting their head around is the difference between sales and receipts. So if the sales tax is 10% and the stuff you sell is subject to that tax, you can sell $1,000 worth of stuff, but you're going to collect $1,100 because of the sales tax. And so it adds to your liquidity. I mean, it can make your cash flow easier, but what you're doing is you're using money that belongs to the government that you've been entrusted to collect. And their assumption is always that you've taken this money and kind of set it aside for them. And so if you don't have the money, that means you took the government's money and spent it on something else. So this is the part that they take such they have a problem with, right? Is the fact that you use their money for other stuff.
Yeah, they with sales tax, they treat it like you're stealing from your customers. Payroll liabilities, they treat it like you're stealing from your employees. And
Yeah.
it's another tax for business owners, but they are very aggressive and not very compassionate when it comes to these issues. For that reason, they treat it like you're stealing.
Yeah. Yeah. Um, and so it's almost like they have a priority in their sort of liens on the business. Like you have other creditors, suppliers, the bank, whatever. This stuff always comes first.
Absolutely. When you start getting hit with tax liens, and I've seen plenty of businesses where their vendors will even get garnished. So that's an easy way to shut down a business. The IRS doesn't always go and padlock a business, physically close it down. When they start hitting all their business partners with liens, their credit card processing, all of that, it shuts a business down just as quickly, if not more so.
What do you mean by that? You mean they'll go to a customer, maybe if I'm the business owner and I'm behind it, they'll go to my customer and say, pay us instead of paying David?
Absolutely.
Yeah. Okay.
And if it's a larger business that you really regularly do business with, or if you're producing a product and selling to someone and they're sending you cash, and part of it is sometimes if they're not even doing anything, if you're providing a service or doing something and then the IRS comes in and it garnishes you or hits you with this levy on vendors, they're not going to have much confidence that you're going to actually come through on your services because they know all the money is going to the IRS, and it just dries up all the business very quickly.
It just destroys your reputation in the business community, basically. Yeah.
Yeah.
All right. So don't do that, people. Number three, our number three thing on the list is failing to report foreign accounts. You've got it abbreviated as FBAR. Is that how it's commonly known?
FBAR or FinCEN, and whenever you talk to any reputable CPA or tax preparer, it should be on their list to ask if you have any foreign accounts. Now, if you're not sure, do these foreign accounts qualify? Put it down. I can't tell you how many times someone thought, well, this didn't qualify or this didn't matter. The penalties are 50%, at least 50% of the asset if the IRS finds and prosecutes you. And there's criminal penalties as well. So it's not something to play with. It is something that's very serious out there. I've had clients that worked for a charity in a foreign country. They didn't consider it their money at all, but they had full control of the account. And we're talking about $850,000. And so I had to, explain it to them. If you wanted to go take that money out and buy a Porsche, could anybody legally stop you? They said, oh, well, I would never do that. But I'm saying, could you? Do you have that signatory authority? Is the account in your name? I've had situations where someone died and a relative died in a foreign country. This case was in Russia. Relatives put 100,000 as an account for a week, took it out, and he was still subject to this.
So what is the idea here? Is the idea that potentially someone could hide profits in another country, or someone could be involved in some kind of illegal activity? Is this why this disclosure requirement is there?
And the requirement has always been there, but it's intended. The original intent of the laws is to go after money laundering, cartels, mafia, etc., and hiding assets in the Caymans, Switzerland, all these places that we've heard from all the movies. Most of those places have been forced by treaty and the U.S. government using their economic weight to disclose all of these assets. Now, it's a mountain of information, but the IRS, they just go in there using more and more computer-based systems. If they find you and start prosecuting you, then you're kind of cooked. Now, it's not even the IRS. This is FinCEN, which is the criminal investigative department of the Department of Treasury. So it gets even more fun.
And so, and what's key here is that you could be entirely, this could be entirely legal proceeds of stuff that, is not a problem, but just not declaring it or listing it is what creates the problem potentially for you.
Yeah, almost all of my clients, it's all legal money. I'm not representing the mafia or cartels or anything like that. But it's legal money, but it's just a reporting requirement. And so a lot of people don't even know about it. One case where she was came to the U.S. to learn to be a doctor. Her and her husband were both in their residencies, and lo and behold, her dad had put $600,000 in accounts in Cabo Verde and Portugal, and she didn't even know about it. When she found out about it, we had to disclose and report all of that. And so, instead of facing a 50% penalty, we submitted a 5% penalty. Got her squared away, and now she doesn't have to worry about it. It's just a reporting requirement moving forward, but you have to fix the mess looking backwards to protect yourself.
Right. So it would seem to me that this would largely be something of concern to people who are like new to the country, or people who split their time between two countries, or businesses that trade internationally, for example. So if a business was doing business in Europe and had an account over there or something, these are the people that are more predominantly sort of exposed to this particular one.
Or Canada, Mexico. If you have relatives, one of the cases I recently handled is married a gal of Mexican descent, but she had been in the States forever, and she had money from her family. And then she became first a resident and then a citizen. And when she becomes a resident, that's when the disclosure requirements kick in.
Got you. Okay, so the obligation kind of grew, and this is the kind of situation where people maybe don't become aware that they have this liability.
Most people don't know. And the funny thing is, this has been a huge moneymaker for the government. So it's been very bipartisan.
Yes.
Republican and Democrat administrations have been eating this up and loving these laws, but it's very tough because most people don't have a clue. Your average person doesn't know about this.
Okay. Now you do. There you go. All right. Um, Number 4 on the list is not filing properly when closing or moving a business. You want to expand on this one a little bit?
So people don't understand. First of all, you have a tax account based on the EIN or based on your social security number if that's what you're using. I highly recommend getting the EIN for most businesses, but you not only have accounts with the IRS, but with the states. So I've had people that opened up multiple accounts in multiple states. They didn't know what was going on. A lot of states have yearly filing requirements. California is one of the worst. That's $800 a year, even if you're doing nothing. And then they add penalties on top of that. And to dissolve your business and do it correctly, you have to go in and negotiate with their Secretary of State. Here in Arizona, it's Arizona Corporation Commission. But you have to get everything squared away under that tax account, close it out, not only with the IRS, but with the state for old EINs. If you're still operating, I just helped someone. They were in California. They had one employee that happened to live in Indiana, and it was a mess. They couldn't close out the account. The person that knew what they were doing left, and so it was a big mess. They didn't know what to do. Called me. Within a month or two, we had the whole thing resolved, and they don't have to worry about Indiana anymore. And we canceled out all the tax debt.
This is because they had an employee there, so they had to open up some state level accounts for submitting some of the payroll taxes and stuff to Indiana.
Yeah, one employee.
Yeah. What, you know, when it comes to businesses and their reporting to states, can you expand a little bit of, like, I can understand if you have an employee living in a state, obviously there's going to be some requirements for things like payroll taxes. But what sort of activity do you need to do in a state before you start to have an obligation to start being registered there as someone who's doing business or potentially filing a tax return in that place?
It depends how much protection you want. So the whole point of setting up a business formation and getting an EIN is so that you can have employees. You can't have employees, W-2 employees without an EIN. If you're doing everything under a social security number, you're fully liable for anything that happens. So any debt, if you owe anybody on the business, if you're operating it just as a sole proprietor or as a DBA, I'm just running on my own, there's no protection.
Right.
If you set that up and you treat it like a business, and it's really when you get employees, you have a high volume, and it really is to protect yourself as an individual and your personal assets by setting up barriers between the business and your own personal assets. And there's many ways to do that. Business formation is a big part of that. Trust planning also does the same thing. Can help with the
So,
same.
so you're talking about the different kinds of business structure. What I'm getting at, or what I'm asking about, is if I'm set up in one state, if I'm set up in Ohio, and we go and do some work for someone in Kentucky, do I now have to file some kind of paperwork or register in some way with the state in Kentucky?
I'm going to give you my favorite attorney answer. It depends.
Okay.
So it depends on what kind of work you're doing. If you're just doing services, typically no. But if it's something that incurs sales tax, so you're selling something in that state, or you're doing business with a state, California is one of the worst. If you start selling stuff in California, or you have someone that's remote, but in California, I have one remote employee that's in California. I'm set up with the state of California, and it just makes life more difficult, but he's a great employee. I'm glad to have him. But when you start having employees in different states, you start selling anything that has sales tax, you better contact that state and make sure it's being done correctly, because they will come after those funds.
Right. And I can just imagine that once the number of states that you're doing business in starts to grow, it can become quite an administrative headache. There must be companies out there that sort of manage. This must be why people go with certain of the big payroll firms and things, because they probably help administer all this thing.
Yes, but make sure your business really needs that. So I've helped people that hired a company. We'll set you up in 4 or 5 different states. I had one client didn't know what all they did. I They paid me a flat rate. I went to 10 different states, closing out these accounts, making sure they didn't and dealing with any leftover taxes from these issues. But they didn't need that. Their business wasn't that big. They didn't already have the revenue. I mean, if you're a multi-million dollar business and you know that's what you're going to be doing, do it. Make sure you're doing things correctly. But beware of someone that just tells you, "Hey, I'll go open up accounts with secretaries of state in 10 different states for you. You can do whatever you want in all these different states," and then they leave you. You mentioned using some of the bigger payroll firms. You can use larger ones, you can use some smaller ones. Just make sure they have that kind of capacity and expertise to handle that. And fewer CPAs are doing that. You're finding more and more companies that specialize in payroll. And if that's what you're doing, I encourage that you find a company. We can always give you a referral to excellent companies that do that.
Awesome. Number 5 on our list is waiting too long to ask for help. So, I mean, I could probably take a stab at guessing what you mean by this, but why don't you expand on this one a little bit further, Hubert?
The easiest time to help someone is when they first know that there's a tax problem. I have a client today. She called in. She's stressed out. She has an audit. We went through it. Look, this is what's going to happen. The audit is coming out, so we get it contested in the audit. Then we get to deal with it when it goes to collections. But she is months, if not years, away from any kind of collection actions. We have plenty of time to prepare her case, wait for her situation to change if need be, to get her the best resolution possible. It's a lot harder to do that when the IRS has already come and seized your bank accounts. They've already liened your home. They've already come and garnished your wages. And I had talked to, was this yesterday or today? I forget. Someone that they already had a New York execution or wage garnishment on them. And New York will not let that go. They're like a bulldog. And so when they came to us, they had this execution in place. We're looking to see, can we do an offer and compromise and settle it? But we have to be very creative. It's much easier to avoid some of these things. One of the big things that is happening is are suspending passports. So if you owe, I think it's over 60,000, they can suspend your passport with the State Department. You can get it back, but you have to set up a resolution, which can take years. And then once you do that, it can take months just for the IRS computers to talk to the State Department computers and communicate and get it released. It's a slow process.
Well, one of the pieces of advice that people will often give whenever you're having problems with any kind of creditor is that you want to communicate. You want to have the channel of communication open. So if somebody gets a scary letter, from a tax authority, and they're not sure what to do, is it at least a good idea just to call them and acknowledge receipt of the letter and say that you are going to do something, that you're going to get help, like just to get it on a file that you are communicative?
I'll revert back to my previous favorite attorney answer. It depends. And the amazing reason for that is if you don't know your rights and options, if you have the money and you're just going to call and pay off the bill, great. 9 times out of 10, you don't need representation. A professional might be able to save you a little bit of money. But if you can't pay or it's a struggle to pay, if you don't know the extent of what's going on and it sounds complicated, or if you call and they start using fear tactics to scare you into paying a bunch of money that you really can't afford. I just spoke with someone, I think it was Monday. First time they called the IRS, they told them you need to take a loan out on your home. You need to pay us $700 a month after you take out a loan on your home. This is everything you have to do, and it's required that you do that. Scared the bejesus out of them. So they called us. What's really going on? I said, look, let's make a couple changes here. We're going to try to protect all the assets in your home because they couldn't afford to refinance their home and pay all their other debts. It would have put them in a real hardship. So we're going to protect the equity in the home. We're going to try to set them up on $200 to $0 a month for payments. And once we get that in place, they're protected for the next few years till they get on their feet. But when you call in, they're not going to tell you what your rights and options are. They're going to scare you. And depending on who you're talking to, they can give you a lot of bad information. Classic.
Yeah. So what you're describing now is kind of sounding a lot like, I had a bankruptcy trustee, a bankruptcy attorney on the show a little while ago, and she was talking about some of the different proposals and things people make with creditors. It sounds very similar to what you're talking about. You often go in there with some kind of offer to try to resolve these situations. Is that correct?
Well, to do an offer or settlement with taxes, they all have very specific programs because they don't want to see them favoring one person over another. So you have to meet the specific criteria to qualify. And if you do, it's great. We do those all the time. We settle hundreds of thousands of dollars for as low as $20. In the last few months, we did one. It was $249,000 we settled for $20, and we get about one of those accepted a week. But it's if you qualify, the shoe has to fit. It's like Cinderella's slipper.
Okay. Okay. So there's certain programs for helping people in certain categories, or with respect to certain types of things.
Yeah, certain types of debt. Sales tax is much harder. Again, it depends on the state. We do it with New York. Most of the states don't do offers with that. Payroll taxes, if the business is closed, we do offers on that on regularly. But open businesses is a different issue. But personal taxes, we settle that all the time.
How often is it that the tax authority is in error?
Plenty.
Okay.
All the time. I've seen where the clients made regular payments, and every time they made a payment, they were charged the exact amount of the payment. I've seen where people filed returns. I have one case right now where they filed the return, the IRS is saying they didn't file it, but on the tax transcripts it says tax return received and processed, and it was done timely, and they're trying to deny like a $600,000 refund because of it. But I just have to get in front of the right person because their own records show that they're wrong.
Okay. And so let's talk about then the people. So a big cohort of baby boomers is in the middle of retiring now. Has there been some kind of change in the makeup of the people that you're dealing with in some of the tax authorities with sort of the changeover of the new generation of workers? Is this one of the issues?
I don't know if it's a new generation of workers, but a lot of it is lately in the last few months. Trump has, the IRS has taken a 20% haircut in staff.
Oh, I thought you meant they let him down where people do the work.
I'm sorry?
I thought you were saying he was messing with the tax returns. Okay, never mind.
No, well, I don't know about his tax returns. But
he cut the labor force at the IRS.
Yeah, the labor force. There's just fewer people at the IRS, so it's harder than ever to get through to the right people. It's harder than ever to follow up on an offer and compromise, to do most things with the IRS. We're experts at navigating their bureaucracy, but it is tough to see that the average person calls in. Most of the time when you call in, you get a message, our lines are busy, just call back another day. And when they do get through, you can sit on hold for 2 hours and then get disconnected. So most people try to call first thing in the morning. That's a mistake. This is a good free tip here. If you're trying to get through, especially to the IRS, the best time is to call is between 5 to 7 p.m. They're still open till 7, your local time, and most people don't know that. So that's when people aren't calling. You can get through easier than ever.
Okay, wow. All right. And do they have different like contact centers in different parts of the country with the time zones, or they do? Okay. So I mean, this is great. So if there's a problem and someone owes money and they can't get through, are people ending up coming to professionals like yourself just because they can't even get a chance at resolving it on their own?
Absolutely. And sometimes I have people come from other professionals where it's been years with an unresolved case where they're just ready to pull their hair out. They're just done. trying to get through, and most typically it's people that don't do it full time, or it's not the only thing that they specialize in. It's tough. So we're very upfront with our clients. But you mentioned people getting scary letters. We do a free document review. So anybody out there, if you just don't know what the letter says or what it means, we'll review it for free. And we just do this as a public service, partially because there are so many scam letters out there.
Yeah, I
And
know.
yeah, I just had someone, was it yesterday? It was yesterday that they got scammed. Someone did their returns for them, claimed a $15,000 credit they weren't entitled to, had the refund deposited in a separate account. They took off with their money, and the taxpayer is left holding the bag with now a $15,000 debt because the IRS came calling and asking for their money. And so they
So
didn't
this
pay
was
any.
this was an instance of someone who was fraudulently offering to prepare tax returns and doing these things to create returns, but getting the money deposited to them instead of the person filing.
Exactly. And that there are so many scams and frauds out there. It's really scary, and it's hard to know what's really from the IRS or really from a state and what isn't.
Yeah. And is the IRS reaching out to anyone by text message or email, or are those just generally all scams?
They're all scams. Nobody's contacting you on Facebook from the IRS. But the scary thing is that people do it, scammers do it because it works. The IRS will almost never call you. And if they do, there are times it might be a revenue officer that they call and they might show up to your door, but they never ask for payment on the spot. If someone ever tells you, you have to pay me right now, give me the money, give me the check, it's a scam. Anybody in their right mind will say either do a check made out to the US Treasury, and even that's far fetched. But the best way to make any tax payments is you go directly to the source. But with the IRS, go to irs.gov, where you get an immediate receipt. You can pay online through your bank account and set it up where you're not even charged any fees to make these payments through an ACH. And you get an immediate receipt. That's your proof. This money was paid to the IRS. Anybody disputes it, I will take that anywhere and get the IRS to correct it.
Okay. Um, Hubert, I've got a couple other little bonus topics I'd like to touch on here. One is something that I've heard about a lot over the last few months. It's the Corporate Transparency Act. But there's recently been some news about that. You want to tell us a little bit about that, what it was, and I guess what it is not now?
So the Corporate Transparency Act, or BOI, Business Ownership Information. This is another thing coming from FinCEN, and it was passed 2021. It's been on the books for quite some time, but of course, enforcement was delayed until 2025. So it was coming up.
This is like a declaration of beneficial ownership, right? Like who
Right.
ultimately controls different businesses.
Exactly. So the filing requirement, people could start filing the beginning of 2024, but the penalties for not complying were going to hit most people January 1st of 2025. What happened? We had an election. And while the laws are still on the books, the Trump administration came out and said, we're not going to enforce this. Who knows? The next administration might come in and say, well, the law's the law. We're going to start enforcing this. But as of right now, and from what we know, the rest of the Trump administration, you don't have to do those reporting. And basically, it's just information out there. You can do it where it's just a number. Your personal information isn't out there. But there were plenty of CPAs and companies that were looking to do the beneficial ownership reporting. And it's more complicated than you would think. So if you're an owner, especially if you're in a community property state, you had to report your wife, you had to report any kind of trust. It was more involved than people would think. So if they ever do come back and say, look, we have to do this, I would highly recommend consulting a CPA or attorney that specializes in this. And I know plenty of business attorneys that were doing this for their clients as well.
It sounds like, especially if you have some kind of more complex personal finance arrangements that involve trust or different companies or holding companies or things of this nature?
Yes, especially then, but even then, sat down with the business attorney and she did a presentation. She was presenting at the same conference that I was presenting at. And the depth that she went into it was more than I knew. And I thought I understood the outlines of the law. I wasn't doing it myself, though. And when I sat down and she explained, well, you have to consider your wife, you have to consider other issues. Even just a husband and wife, it sounds more complicated. If you have a partnership, I would get some expert advice doing that.
Mhm. All right, good to know. Um, and then, relationships with CPAs. How should business owners think about their relationship with their CPA? We've talked, the note here I have is sort of collaborating versus relying upon. What can we expand on upon with respect to that idea?
So, trust but verify is the phrase that comes to my mind. So, anybody, I trust my plumber, trust my electrician, I trust all kinds of professionals, my estate attorney, because I don't do that on my own. I have my specialty and I stay in my lane for the most part. I've paid plenty trying to do plumbing on my own. It usually blows up in our face, right? Um, but as far as no, I'm sorry, it kind of escaped me the question.
Well, collaborating with CPAs versus relying upon them.
You want to use expert professionals. You don't want to trust them because so many things can happen. One, especially if the guy's been around forever, they can die. I can't tell you how many people, I had an excellent CPA, he passed away. It was handed off to someone else, their son, or sold to another company, and they did a horrible job. They can get sick, they can get ill. Um, I knew someone who got ill for 2 years, couldn't handle any of it, and actually got disbarred because they had a mental illness during the period where they just couldn't handle it. One CPA had many seizures. Great guy, still refer business to him, but for a period, he was mentally incapable of handling those returns and he didn't know it. So if you have questions, if what's coming out on your tax return doesn't make sense, or the IRS sends you a letter saying, hey, this isn't quite right, get a second opinion, get better information. I absolutely recommend that you need to sit down with your CPA and they need to explain what's in the tax return. Not
Mm.
every detail, because that's why we hire professionals. But I don't do my own taxes, but I sit down and have them explain to me, this is what's in here. This is the overall gist of it. And if anything doesn't make sense to me, if I can't see my return and understand more or less what's going on, don't sign it.
Yeah,
And if you
you
compare the
want
return,
to work with them and not just abdicate a whole area of your business function to someone and never have an idea or conversation about what's going on over there.
yeah, consider yourself the CEO of your life and you're hiring them to help you to do a vital function, but they still should be reporting to you and enabling you to get done what needs to be done. But it's an enabling, it's assistance. Don't just shove it all to them, because then when problems hit the fan, you're the one that's ultimately responsible. Doesn't matter how much you didn't understand what was on that return. If you sign it, you're responsible for it.
Yeah, I mean, I've heard of many cases over the course of time, and not just CPAs, but also just people who are bookkeepers, where a business owner will just kind of say, "Okay, you're in charge of this," and then letters start coming from the government, and instead of opening them, they just hand them to that person. Oh, this came and has to do with taxes. Here you go, kind of thing. And what was happening was a bigger and bigger snowball was starting to roll down the hill with some kind of problem, and they weren't addressing it. They were just abdicating it by handing it to that person. And then when it finally did really come to their attention, to your earlier points about timing, they were way behind in trying to take any kind of proactive action in addressing it.
Yeah, and that situation I shared earlier where someone was having seizures, didn't even know it. I mean, you can't really blame the CPA for it, but it happened. They ended up with a tax bill over $300,000 and a revenue officer that went to their place of business to pretty much do an interview, see what could be pulled out and hauled out of the business and sold by the IRS. Kind of a
Wow.
scary situation. But by getting involved, when the revenue officer showed up, we had all the information because we were prepared. We knew what to do. And basically, we set up an installment agreement to keep the IRS off their back while we contested the original filings and we squared everything away. And about a year later, they got a $90,000 refund of everything they had paid in because we got the tax bill from 300,000 to zero.
And it was because they never actually really owed the money. It was, or was this a settlement?
Well, no, it wasn't a settlement. It's because they corrected everything and we made a reasonable cause argument that, look, this was out of their hands. They trusted a professional. Life happened. He was having health issues that he couldn't be foreseen. He didn't understand what was going on. But that is not the normal case. There are plenty of cases where I've had people go through situations, someone embezzled from them and they just weren't paying attention. The IRS said, no dice, no deal for you.
Yeah. But it really highlights the fact that there can be more than one outcome and getting help from someone who understands what these outcomes could be is probably the best route for someone to take.
Yeah.
Yeah. Hubert, this has been a great conversation. If somebody wants to learn more or get in touch with you, what's the easiest way for people to find you?
guardiantaxlaw.com, or you can call us at 520-485-7371. We do a free consultation. I said before, we'll review letters for free, tell you if it's something to worry about or if it's just a scam. But yeah, you can always reach out to us those ways.
Awesome. I'll put the website address down in the show notes down below. And I want to thank you for coming by today. It's been great to talk to you.
Thank you, David.
So, how can you learn more about buying, selling, financing, and managing small and medium-sized businesses? Easy. Go over to my blog site, davidcbarnett.com, where you can learn more about me and how I work with my clients. You can learn more about my books and courses that I've prepared for you. You can find out how to subscribe to my email list, the YouTube playlists, and more. There's literally hundreds of hours of content there, all for free, and I'd love for you to be my guest. Special thanks go to Mark Willis at Lake Growth Financial, today's video sponsor. Mark helps people better manage their personal and business finances through the Bank on Yourself insurance strategy. This is something I've done personally and I've seen others use it successfully for years. Go to newbankingsolution.com to find all the interviews I've done with Mark and learn more about the advantages of these programs. While there, sign up for a free consultation to learn what this solution might look like for you.